Wow, everyone, what a day in the markets. Today we saw the Dow, which posted a incredible rally on Friday, peel back all of that and sink even further, beating out even the lows made on Black Thursday last week. In fact, apparently the Dow's decline today of around almost 13% was just slightly higher than the infamous Black Monday of 1929 that marked the start of the Great Depression. Um, However, I definitely do not believe we are on the verge of a Great Depression. I think that this is definitely a much more temporary turn of events. It's not like coronavirus will be with us for 5 years to come, unlike the financial mishmash of the Great Depression. And even with the Great Recession, we saw that the stock market, after just a year, was able to pull itself back. But nonetheless, a lot of investors are very spooked because of how extensive the drop was. Some people are saying they don't believe the drop was for really any reason. I believe it was for a lot of reasons. I believe that over the weekend we saw a increase in severity and use of shutdown and lockdown measures in many U.S. states, many U.S. cities, as well as in many nations across Europe, where it seems like right now the coronavirus pandemic is really festering. We see that France is on the verge of a total lockdown. We see Spain is having lots of issues. We see the situation in Italy worryingly not really seemingly to improve as they continue to post drastically increasing numbers of cases and deaths. We see in the US how lockdowns, which previously were not really believed to be able to happen in the US by many, are now not only happening but increasingly spreading across the country. We see also that many nations are shutting down cross border flows of people. Canada is outlawing travel to Canada by all non citizens except for a temporary exception for US citizens, which they say is not certain to be permanent. We see Germany closing its borders and some other countries in Europe doing the same. And so it's the market pricing in a even greater impact from coronavirus than it had previously expected because all of these things, people being locked down, borders being unmovable by personnel, are really going to have a even more disruptive impact on company earnings, on the economy. Goldman came out with a statement recently saying that they expect the US economy to decline by 5% in the first quarter and for growth this year to be only a nominal 0.4%. I mean, those are horrifying numbers. And so I think the market was pricing all of that in, and I think it's going to continue for a little while because every day we see the fight against coronavirus continuing and making some progress and then some steps back. We see at least that some vaccines are being tested, but we do not know if those vaccines will work. We see that containment measures are being implemented, such as lockdowns and closing restaurants and casinos, etc., but we do not know if those will work and how long those will take. And so it seems right now that based on all of that, the volatility is very likely to continue. I think that we are at such a low point right now that many stocks do look very cheap. I personally suggest looking at sectors and companies that are not at risk of going under or having severe liquidity issues that might result in bankruptcy, uh, some kind of government bailout deal that affects their ownership dramatically, stock dilution, etc. So companies that have large cash reserves or have strong business lines that will be able to recover quickly or that aren't being impacted too heavily right now by coronavirus. For example, I think a lot of tech companies out there that have big cash hoards and very low, um, relatively low operating costs, as well as operations that are not too drastically, at least compared to, say, airlines or retail, for example, affected by coronavirus. And so I think there's lots of options out there that are slightly safer. and lots of options out there that are definitely huge gambles for companies that unfortunately do not have good liquidity, have high debt loads, high payments for those, and who may very well face difficult capitalization situations. And so I think based on that, it's definitely is going to continue to be a tumultuous time in the markets. But once again, like I always say, when stocks are high, people wish they were low and could get in on them. And now when they're low, people are scared. And so it's about finding the right amount of risk reward and not over leveraging yourself. And so happy trading out there.